did section 1 and section 2. Alright. Section 3 is just simply combining column 1 and column 2. So what you do is, what you're writing in your adjusted trial balance section is just the correct balances in your account. You're going to take anything across that doesn't have an adjustment, it just goes across to the same column. And then you're going to, it's applied the debit balance. We adjusted it for the credit, so now what's our balance in supplied? $1,000. So we're going to take all of them across that had no adjustment, just copy them to the correct column. And we're going to show the ones that had an adjustment, we're going to adjust. In other words, we're going to show the correct balances. Right? Like now our supplies, this shows the correct balance. Everybody see that? Agree? Because we've done our depreciation, and then we're showing our prepaid rent's going to show the correct balance. Okay, so now if we've got correct balances in our account, then we can go ahead and do our statement. So what we do next is move across to the income statement column the accounts that go on the income statement. What kind of accounts go on the income statement? Revenue and expenses. Where do they start? Right here? There. So those go in the income statement column. So all the rest go in the balance sheet column. Okay.
And
that's it.
that's it.
That is it. Okay? So everything down to fees income is going to go to the balance sheet column. Right?
So about half. It's about an even split.
Sometimes.
Well,
You just go down to where when you see fees income, then that'll be the rest of it will be your income and your expenses, and they're going to go to the income statement. Then you're going to add your columns up, and do they balance?
You combine them together.
are they supposed to balance?
Not right now. What have we not yet done?
Owner's equity.
Not throw your owner's equity in there.
All right, and what did we have to do first?
The
You
income
have to determine net income first.
So we got to determine net income first. All right.
Do that.
Okay. So what we do next is we start with our income statement column because we've got to have net income in order to make it balanced out. We have to find the difference here in order to get the result over there into owner's equity column. Right?
Yep.
Okay. So we subtract smaller side from the larger side. Revenue minus expenses. Put whatever we get on the smaller side just a check. That'll make those columns balance. Alright, so we come up with our net income, which is the difference between our revenue and our expenses. Revenue minus expenses. Net income. Go to the smaller side.
Right.
Add it up now, we should get $47,000 if we subtract it correctly, put it in the correct number.
Which you wouldn't write that 47,000 on there.
That's your net, that's your revenue, comes right here.
I mean, well, no, that's not what I mean. Like you wouldn't actively add them two up.
You subtract your revenue minus your expenses. Is that what you're saying?
I know that. Now, what I'm saying is, you wouldn't write under there. Well, maybe you do then.
Yes, you got to show that your column's balanced. You're just going to bring it on down to show that.
Well, I was trying to.
Okay, gotcha. All right, because when you add this up, and then you bring down your 47,000, it should balance, right?
Yeah.
Yeah.
It's supposed to.
You subtract it
If it
correctly.
didn't, then you.
If you didn't, you subtracted wrong, go back and just resubtract. Okay. So once we have our, in this case, since revenue is bigger than the expenses, we have net income.
Yep.
So take that 33,657 and we go over to our balance sheet column, put it under the smaller side there. That's what we're going to be ended up adding to our equity, right? And then when you add those columns up, putting in your net income, then the debit column should equal the credit column. Okay. Then you completed your calculations. And that's all you have to do on your worksheet. Okay. We're going to go over it again. We're going to take it. We're going to just spend a day or two on this. Go ahead and do some of the exercises.
There's a lot of fun said for this one.
That's just a lot to try to accomplish.
Yeah, there is. Okay.
You know.
Okay. But now we've got a picture of it, right, in our minds, and we can go. Now we can go ahead and take it a piece at a time. So our accounting cycle, which is our preparing the worksheet, which we just did. The next step is to prepare the statements. You've got all your information right there now in front of you. All you have to do is go back to your worksheet, right, and put it in the correct format. Everything that was right there in that income statement column goes right here, doesn't it? Has your revenue, has your expenses, and you even knew what your net income was. So all you had to do is put it in the correct income statement format. Alright, so that's revenue, expenses listed, total expenses, gross revenue, came up with our net income. It's just copied from your worksheet column. That's it.
So can we get like a good accounting, so we're gonna have like templates of these?
Oh,
To write all this stuff out every
oh yeah, you'll have your things already.
So I guess my back works, because this makes more sense to me now than it does this way.
Yeah. It's a matter of, it's easier now to just pull it from there because you've written all your accounts down. And you
So if we started here, I would be much more confident in where we are if we started here.
Well, if we'd have started here, you wouldn't be able to analyze your transactions and know what to put where, would you? And what has a debit, what gets debited, and what gets credited, right? But this is the easier format, yes. Just like doing your entries is easier doing it in the journal.
Do that than it is doing the other things.
Yeah. But you have to know how to analyze those transactions first, and what gets debited, what gets credited,
just like
what
when
gets increased or decreased.
Just like when you showed us how to do the trial balance. We had already done all the income statement by itself. It's like, we could have done this before.
On that! Right, exactly.
But you wanted to make sure we knew how to do the
One step at a
other.
time. Right.
Do the hard way first and then the simple.
Well,
So you get it.
so you get it. Okay, so we're good. Here we are. Got our income statement. We just pulled it off that column off our worksheet, right? Then what? Next. The next statement.
Balance sheet.
Statement of owner's equity, right? Okay, so then we create our statement of owner's equity, which we go to our worksheet. Let's look in your book at the worksheet, showing you one step at a time. In the middle of your book, the clear sheet. Start with the first one, and you turn it over, and it shows you your adjustments, right? And the next one, if you flip it over, it shows you your adjusted trial balance. The next one, put in our income statement. And our next one, figured our net income, put it in the correct place, come up with our balances. So, now we're doing our statement. We look at that income statement column, right? Took everything, put it on our income statement. Then we do our statement of owner's equity. You look on there to see what your beginning owner's equity was. And it was Carolyn Wells Capital, $100,000. So we put in our $100,000, our beginning. Then we go back and look, where's our net income? $33,000. 67. Now where's the withdrawal? 5,000. 5,000, right? Everybody see it on your worksheet?
Yeah.
There's your withdrawal. And then subtract your your withdrawals from your net income to get your change in your, in this case, we had an increase in the capital this time. Add it to our beginning owner's equity to come up with our ending owner's equity. Here's our ending owner's equity. Okay. Then what's next? The balance sheet. Okay. And on the balance sheet, we go back to our worksheet. We look at the top. There's our assets listed, correct? All of them, one little clump. Assets on one side. On the other side, you have your liabilities. And then you've got your ending owner's equity from your prior statement. And these must balance. Assets must equal liabilities plus owner's equity. And then at that point, those are your statements. We've completed the statements. Here's our balance sheet. And we're changing our format on our balance sheet. Used to, we did it side by side. And now we're going to do it the official way. This is the report form that is actually done in the business world. So instead of showing it like our equation, which we were doing, so that you can be able to see the equation, we're doing the assets at the top, total assets, and liabilities and owner's equity or capital at the bottom. Then total assets must equal the liabilities plus owner's equity. We're just using a different form. But assets at the top, bottom, instead of using the equation form. Okay.
But you run into the same thing. I mean, it's the same.
It's the same.
It comes
It's
all out.
exactly
It all comes to the same.
That's just the preferred form. That's all. It's the same thing. The worksheet's not a financial statement. It's not a permanent part of the accounting records that are officially legal, but we do keep it to show what we figure. It's just a tool for us to use to figure our things. So, after we've completed the worksheet, prepared our statements, then remember what we hadn't done yet. Those adjustments are not in our official records. They haven't been entered in the journal. Hadn't been posted to the ledger. So next we go in and just write it in the journal. And the way we do that is, wherever we are in the journal, we write adjusting entries. These are for December 31st. We put each of our adjusting entries. We had supplies expense debited, supplies credited, rent expense debited, prepaid rent credited, depreciation expense debited, accumulated depreciation credited. Right? Post it to each one of our ledger accounts using our 5 steps for posting. And then our ledger accounts are now correct. Okay?
So that's, makes it correct.
Make them correct. We have updated them, and now everything should be correct. Okay. And are we posting it? Put the date in. What do we do next? Write the word adjusting. Now, this is the only time in any of the accounts in your ledger that you need to write it. This time in place. You just write the word adjusting to show that this is an adjusting entry.
You don't have to write a description.
No. Your description is just going to be adjusting entries in your journal.
Yeah, just.
And then, so you don't have to write a description under each one. Just show them. But then when you post them to each of the ledger accounts, you just show what page of the journal you got it from. Right, go to General Journal, page 3. Then, put in your debit. Take it across and show the balance as a debit balance. Then what do you do last? You go back. Show that you finished your posting by showing the account number that that finishes the posting process. Okay. And that's all that chapter. So here's what we're going to do, but we're just going to do it. We're going to learn how to do the adjustments first. So, and we go to the end of the chapter.